All right, Evan, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. Starting off with the S&P 500, we can see that we had a nice bounce later in the week, obviously Thursday, Friday, well off the lows of the week as Monday. We got all the way down to the 426 handle on the SPY here. And then it was really kind of just up throughout the rest of the week. But one of the things I want to point out is that this market really had trouble, even on the major up days. It had trouble holding its gains. So Tuesday we had a nice rally off the lows, and there were sellers coming in the final hour. In the morning on Wednesday, we had some more sellers put in a bottom, and then we rallied up here and finished pretty strong. But then Thursday and Friday come along, and we have a nice rally. Thursday, obviously, we had the major gap up, got us well off the lows, but then we kind of just really faded all from pretty much 1 o'clock in the afternoon on Thursday all the way till the close on Friday. So that's telling you there's still some sellers in this area. And I don't really believe that this is a bottom here quite yet, maybe a short-term bottom, but I do think we have another leg lower. And reason for that is, I talked about this last week, but we've put in a lower low here. So we have, remember we talked about this being a low, and then we have another low, and then we have a lower high. So this is your high, and then a lower high. So we have lower highs and lower lows now. So what that tells me is that at some point in this range, I would say around 444 to 445, that's where we would expect sellers to step back in and keep this market off the highs, which would potentially give us enough gas to get down around that 200 moving average on the SPY here. Usually when the market puts in a bottom, it rips to all-time highs, or it rips back higher. And I'm going to show you here if we look on the weekly, you can really see going back to last year, each time we have a sell-off or we test this 20 MA or even have any type of sell-off, it's immediate. Look at this green bar, huge reversal, sell-off, big outside reversal, sell-off, big tail candle, sell-off, major tail candle here, sell-off, huge reversal, a minor sell-off, then a big reversal. This time we haven't been able to do that, and we've stayed inside of this red week. And on the monthly, we are also still inside of this red engulfing reversal on the monthly. So we have this market's not even close to out of the woods currently. And sentiment has changed pretty quickly. I'm seeing a lot more bulls out there. So we're getting a little bit closer to a neutral type of sentiment. Now, also talking about last year, if you notice, we topped out on the 2nd. We came down, made a little bear flag, and then came down again, and we got almost back up to all-time high, as you can see right here, and then we stalled back out and we made another leg lower. Now we made a higher low last year. I think we make a lower low this year, potentially going down to that 200 MA. However, it just goes to show that there's just because we come up and make a bear rally doesn't mean that we're going straight back to all-time highs. So last year, around the middle of October, we rolled over, and I believe that's probably going to happen again. Now, over the last couple of days, we've had lighter volume here in the market. We do have a holiday coming up on Monday. The bond market is closed. I believe the stock market is open, though. And you're going to have lighter volume. You notice Thursday, Friday, we had some pretty light volume. So, I think the market probably holds up maybe in the beginning of the week. But then as we get closer to Options X, which is this coming Friday, we'll probably see a little bit more turbulence. The only thing that could really change that is if we get some news out of Shanghai or something like that. Maybe we get some more volatility, if that is the case. Also, taking a look at the Qs here. So everything right now is about the yield. The Qs are going to be the weaker sector with the higher yield right now. And Q's not even getting close to that 50 moving average on a relative basis. If we look at the SPY, you basically tagged it in spirit of tagged it and pulled back. Same thing with the SMH, and you guys know I talk about semis all the time. Semis could not even reclaim their 100 MA, and this is the area, this 258.59 level here. Look at how we've struggled with this level for really since June. Actually, you could make a case because we put the high in February, and we haven't been able to get above that since then, really, at least sustaining that. And I like the semis. I like to look at the semis as a leading indicator. We rejected this 100 MA, and we rejected that line in the sand, essentially. So that's telling you that there's going to be some more pressure in the triple Qs and in the market overall. IGV cloud software also much stronger. However, Microsoft makes up a large part of this ETF, but still getting rejected pretty hard at that 50 MA on Friday. And this is still in a little bit of a weaker technical position. So just bear that in mind. Tech will be weak. Now let's talk about yields. So I told you guys for months and months and months, ever since I started doing these videos, that yields were going to make a big move later this year. And that looks like that has started here. Now let's take a look about talk about the symmetry. And I told you guys it's probably going to have 4 or 5 months of consolidation to do, based on what it did earlier in 2019 to early 2020. You had 4 months, and then 1, 2, 3, 4 down, and now we're moving up again. So the chart symmetry is there. And if we look on a weekly, you've got your pivot here. So 3, 6, 9, 10, 11, and then your 12th candle is your breakout here. Same thing here, 3, 6, 9, 10, 11, 12. So we're starting to see them move up here. Now for me, I would have to see some type of a pattern here on yields to jump on board. I thought we would get a little bit more of a pullback here, but I think we'll still have a good chance to jump on yields. They're probably going to go much higher. I'm looking at the 10-year going to at least 2%, maybe 2.2. And the 30-year, we're probably going up to 2.6, 2.8, somewhere in that range. So just be ready for that. But speaking of yields, so the jobs number on Friday, so the market was a little bit confused as how to react to that, and specifically look at the IWM. Typically, when we have a higher yield, that's going to help small caps. It's going to help the IWM, as there's a lot of bank stocks, there's a lot of energy stocks in the IWM. As you can see, the XLF was higher on Friday off the back of that. However, the IWM was not. One of the reasons for that is because when yields go up because of growth, that's a good thing for small caps. But when yields go up because of inflation, that is not a good thing for small caps. It means consumers have, essentially they have less money. They may have more money nominally, but their prices are going up faster than wages and income. So that is going to hurt small caps, as well as large caps. So that's why you're seeing the IWM kind of falter here. So I just want to make that distinction out there for everyone, as yields are complicated. And, same thing with stocks. A stock could go up because they had good earnings. They could go up because an analyst likes their CEO. They could go up. There's a lot of reasons. There's a lot of reasons that yields can go up too. It's not just because of growth. It can go up because of inflation too. And that's why you're seeing, we had yields up, and usually that's bad for gold. But if we look at gold here, gold scratched out a flattish to positive gain on Friday. So there's, this could be a changing of the narrative here. And I talked about the possibility of gold being able to rise with yields at some point. And when it's due to inflation, that can definitely happen. So, it's just one day. We're not going to make too much out of it yet, but this is something to monitor moving forward. I told you guys I like platinum. Platinum getting a nice juice on Friday off the lows here. It does have a lot of resistance here in this choppy area, and you got the 100 MA just above. So it probably needs to do some more backing and filling, but I told you guys a few weeks ago that this was going to be the bottom in platinum, and that looks like that has happened now. So precious metals may be getting a bit of a lift here, although I think they got a little bit here's silver here. I think we had a little premature pop on Friday. I would have liked to see a little bit more sideways action on silver and gold as well. But the fact that they held up with the higher yield, that definitely says something. It's possible. Now, it's just one day, but this is something we definitely have to monitor moving forward. So let's move on to energy. I get a ton of questions about crude. So crude possibly confirming a breakout here. So we had, we broke out on the daily Monday, then Tuesday we confirmed that. And then Wednesday we had a little bit of a reversal. And I said, I said in my videos that it's all about the weekly close. And we made a weekly close above this resistance, above the double top. So crude could be on breakout here. So what I would look for now is your next resistance is probably, if this doesn't reverse immediately and close back below this double top on the weekly, you're probably going to go up to about $90. So you have this kind of broadening pattern here. You can see that on crude there. Then you have like these little pivots right here. 85, $86 is a little pivot, and around $90 is a nice little pivot here as well. That's where I would see crude going if it is definitely on breakout. So that's really just what I'm seeing in the near term. Crude's exceeded everything I thought it was going to do. So, and I don't have any type of sell signal on it. So, yeah, as far as crude is concerned, I think it's clear to go, unless we get a major reversal or something like that. And then let's take a look at some of the stocks here. So XLE, I talked about this inverse head and shoulders. That played out perfectly to target. We saw that we got up there on Tuesday, reversed, put in a little bit of a pullback, and now it's getting above that. So XLE, XOP, definitely confirming what we're seeing on crude. OIH has been a little bit weaker, but it's still in a good technical position. I think this one stalls out around 225, 230 in the near term. But crude making a nice move here. And nat gas, so nat gas has been really volatile lately. I do think it is getting, it's starting to price in some of the energy concerns over the winter. And the reason I say that is because look at all this volatility at the top. So we had this massive move. We pulled back, had a nice pop off the 20, and now we're pulling back again. And we're not really able to we made a new nominal high, but we haven't really been able to take this pivot out and confirm above it. And now that we're hitting the 20 again, we're kind of stalling. Usually if it was going to want to go much higher, we would see a really nice pop off of that 20, and we didn't really see that. We had a nice little tail candle Thursday, but Friday we kind of gave back some of those gains. I think if we were going to go much higher, we would have had a nice green bar input on Friday, but we had a red day. So nat gas may be stalling out just a little bit here, so bear that in mind. And then lastly, I want to give everybody a little update on uranium. So just look at the URNM. So I talked about, I told you guys not to chase this thing. And it looks like now we're putting in a little bit of so you see this move here, we had a sharp move down. And now we're kind of putting in this sideways sort of consolidation. This could be setting up to make a little bear, a shorter term kind of bear flag, possibly down to maybe this 65, 66 handle. I'd have to do some numbers on it. So you see the same thing on the, sorry about that. See the same thing here on the URA. So sharp move down and then sideways consolidation. CCJ, same kind of thing. This one's got a bit of a steeper angle, but it's possible that we get a retrace in uranium. So if you're looking to pick this up long term, you may get your opportunity pretty soon. So I just wanted to point that out on uranium because that is something I know a lot of people are interested in. And I told you guys not to chase this thing because you'll get a chance to buy it, and it looks like we're getting that chance now. But anyways, guys, I'm going to wrap it up here. Thank you so much for listening. Come find me on Patreon, come find me on Twitter or YouTube, and thanks for watching, and I will talk to you next week. Take care.